The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. We saw a fairly quiet trade on Wednesday ahead of the June WASDE report. We also got that big acreage report estimate coming later in the month from USDA. What are we tracking across the grains and oilseeds right now? Let's talk about it and have a conversation with Dave Brock from the Brock Report. Dave, welcome back to the show. It's good to talk with you again, my friend. How are you?
Good. Doing good, man. It was good to chat with you.
Well, I'd love to just get your perspective on things across the grain and oilseed trade right now. I know a lot of producers are kind of in the doldrums. I don't love the price action here. We just can't seem to find any sort of story to really move these markets. It just feels like we're largely kind of chopping sideways to lower here and just kind of grinding away across the grain trade here, but especially on the row crops, corn and soybeans in particular.
Yeah, especially for corn. I think we got a lot of frustrated producers right now, frustrated market advisors. I mean, if you look back to September, I mean, a July 25 corn, kind of bouncing over the 430 level when we had a, 2 billion bushel carryout on the balance sheet. Now here we are right ahead of planting season with a 1.4 or less carryout on the old crop balance sheet. We're trading the same price. So it's frustrating. It was kind of hard to see coming. And it's been a tough grind. So corn's been really tough. Beans, it seems like almost nobody knows what to do with the beans, which is always the case till you get into the production season. It's been frustrating, but kind of feels like the corn move is coming to a close here. And only time will tell.
Talk about corn specifically. I mean, is there any carry in this market right now that you really see? I mean, just drill down a little more for us here with corn. I mean, especially ahead of that end of the month acreage report. Are we going to add corn acres or did we take some away? I mean, this corn market, to your point, just it's stuck at these levels and we can't seem to get out of this trading range we're in.
Right. Yeah. I mean, the other thing that kind of seems backwards about this corn market is when you look at what the spreads have done. You would expect with a really tight old crop balance sheet and, pretty cushy new crop balance sheet with 95 plus million acres, you'd expect to see the old crop contracts, higher than the deferred inverted. And instead what we've gone into is, nearly full carry, kind of as much as you can expect, a full carry market. So this is going to be a year where storing grain makes sense. Selling deferred contracts makes sense. I think there's a lot of risk, especially as we get into the growing season closer, when harvest kind of starts to come into view. I think there's a really good chance basis is going to collapse. Obviously, a lot can happen between now and then, but if you've got bushels to move between now and harvest, you got old crop bushels to move. Even if you don't like this price, I'd look at basis, call up your elevators, maybe consider setting basis contracts, because the cash price hasn't fallen nearly as much as the futures board looks like. So, get away from the screen, look at those cash bids, look at the basis contracts. I think makes a lot of sense. If you're wondering what to do for the next 4 to 8 weeks here.
Well, and that's the thing is that we're going to get into this growing season and, you think about backyarditis. Some folks might have that in a positive or negative way, and you just look across these markets. And I will say this year in the grains, we were talking a lot about seasonality here right around Memorial Day. I almost feel like you could throw that typical seasonality out of the window here because it just doesn't seem like it's happening at all, Dave.
Yeah, and I mean, when you think about what causes the seasonality, typically it's issues with planting, issues with growing season weather, just two things that are just non-existent this year, right? I mean, obviously every spot's a little different, but on a national scale, there's really been no hiccups yet for the corn crop. And so when you have that big acreage coming, no issues with the planting or the weather outlook, you throw in the fact that large specs, you go back to February, were extremely long this market. And, we talked, I think here, I know we wrote about it a lot, how that was a big risk. And then you look at how well the crop is developed in Brazil, and that's going to be coming online. You put all that together. There's not really a lot of reason for anybody to be buying corn right now until we get our acreage report So, yeah, it's been a tough combination of factors. I think you're right. The seasonalities, I mean, something's got to pop up to make those come to life.
Well, and to your point, the funds, that's another interesting conversation here, especially in corn, where they went from very long to short in a matter of weeks. And I know they've done some selling on the soybean side too, but corn especially has been interesting to watch on those commitment to traders reports, Dave.
Yeah, it has been kind of interesting because I mean the COT reports, especially if you look at what the large speculators or the non-commercials, if you look at them, it kind of their behavior kind of summarizes my thoughts on the market. In soybeans, they have not done the same thing 2 weeks in a row. I think for like it's been like 3-4 months, maybe like the end of February, early March was when they were net sellers 2 weeks in a row, right? So they'll sell 1 week, buy the next. They've just done nothing for months now. On the flip side of that is corn. You go back to February, they were net long about 220,000 contracts, futures and options. Now they're net short 270. So quick math isn't my forte, but that's what 490,000 contracts of futures and options combined. That's a lot of bushels. And so the two main takeaways that I get right now from looking at the COTs for corn is they are now approaching their record net short. And what everybody likes to see is you got large specs very short the market, commercials very long the market. That has the potential to cause like a sharp rally. Okay, so we're not quite there yet. I mean, their record net short was 342,000 contracts back in 2024, and they kind of approached that midsummer before this rally last year took off. But so I think that's going to become a supportive factor. I can't see that happening before the acreage report unless something really, really turns. The other key nugget that I dug out of looking at the large specs specifically over the last few weeks is, obviously their net position is a combination of how many longs they have and how many shorts they have. And so if they're net short, they hold more shorts. But they have never, in the history of the COT that we follow, the supplemental. So since 2011, they have never held a smaller number of long contracts, right? So they've held more shorts. They've been more net short, but they just don't want to own corn right now. I can't blame them, right? Because I think the general thought process is the USDA came in around 95. I think the market's thinking it's going to be at least that. And so until that question gets answered here at the end of June, it's going to be tough to get people to buy corn.
It almost feels to me, and I'd love your perspective on this, that we have no weather story. We have big crops South America. We presume we have a big crop here in the U.S. Planting has gone extremely well in most areas. Uncertainty with trade issues and policy and everything going on there. And just it feels like we have all of these factors that are bearish the market. Funds, too, as we were talking about. And a lot of times, usually we can get one bullish item that sparks the trade. But to me, this season feels different to where it's going to take a combo of bullish factors to give us some life in these markets, Dave.
Yeah, it seems like it. I mean, again, we're trading, not the nearby contract, but if you look at July 25 contract, we're trading the same price with a 1.4 billion bushel carryout as we were trading with a 2+ billion bushel carryout. Yeah. I mean, the USDA has increased their exports, 150, 200 million bushels over the past several months. It's going to take a combination of factors. But the good news, or the good way to look at that news, is not necessarily like, all right, if all the news is bearish, then you got to can it get more bearish, right? I mean, I'm of the opinion that, today's market price is a combination of what everybody thinks of the market, right? So if everybody's already bearish this market, how much lower can it go, right? That's when market's bottom, is when it looks the worst. So I don't know if that's a last ditch hope for our clients here that the markets turn around. But I think back to like last fall, that's kind of how everybody felt, right? We had a 2+ billion bushel carry out. There's nothing good. And then next thing you know, we saw a good 80-cent dollar rally come after that. So things change, markets change. The main thing is focus on what you need to do with your old crop over the next, few weeks to a few months. And, if you start pricing new crop, new crop prices are not that bad either. You look at the board, you got March over 450. You got July at 470. So it's not all bad news. I know it's not what we want to see, but there's definitely some good stuff going on out there.
Dave, always appreciate the insight. Anything final you would mention or reiterate to producers listening in as they're keeping an eye on their marketing plan right now?
Yeah, I don't think, you want to avoid pricing as many bushels as harvest as possible this year, right? Always store a big crop. It's kind of the rule of thumb. We're a long ways from that being a reality, but look at those deferred contracts, look at storage, on-farm storage, taking advantage of that. And that means selling it, not putting it in the bin and hoping futures go higher. There's plenty of opportunity to capture carry, even with today's interest rates, and look at basis contracts for sure on old crop bushels that need to move soon.
I know folks can learn more and take a look at all of your guys' analysis and reach out, brockreport.com for more information. Dave Brock, the Brock Report, always good to hear from you, sir. Thanks for joining us on Market Talk, and we'll look forward to talking again real soon.
All right, thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.